Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and we're getting an update today from Joel Elconin, co-host of the Benzinga Pre-Market Prep Show and editor of premarketprep.com. We'll put a link to that down below so you can follow along with Joel's work. And Joel, it's another week where despite the macro news, despite the micro news, despite the market news, it's all about mega cap tech. And you were making a great point to me off mic that not all tech is created equal, and there is a separation within the tech space. So maybe break down that point for listeners.
Good afternoon, and thanks for having me. Yeah, you've seen a monumental shift here where the tech is like the AI and the AI related, whether it's the companies producing the chips for the AI, whether it's the suppliers, the coolants, the energy suppliers to it. All those are getting the boost, and then Apple, of course, brings in their AI this week. But I mean, cloud's being left out in the dust. You look like a chart like Snowflake, and off its earnings in the pre-market hit something like 185, 190, and the stock right now is under $130. Is still trading at an outrageous valuation. So there's been a monumental shift within tech to the AI, and once these things get going, Chad, it's hard to stop them.
Well, you brought up Apple there, and they unleashed the Apple intelligence. A lot of people had started dogging on Apple, and then recently they've had this big resurgence. What do you make of the move, both fundamentally and technically?
Well, fundamentally, I mean, it just blew the doors off people. I mean, I think you had, aside from the fund managers that weren't in it, just a malaise. Like, okay, it's going to go to 200 and go back to 160. You had a trading range basically since early 23. Between 165, 170, and 200, and it just put that 200 in the rearview mirror. And when you see those kind of moves, and if anything, for your investors, I don't know whether they're not technical or fundamental, but when you have a stock make a new all-time high and a new all-time closing high by that big of a margin, it's usually not a selling opportunity. It's usually, a buying opportunity. You got that crazy follow through to 220.20, I believe. On Wednesday, it got a little bit overdubbed, but, perhaps wait for some consolidation, perhaps wait for some pullbacks, maybe to that former all-time high. Fundamentally, I mean, they've been dogged, for the slow revenue growth over quite some time. And through the presentation, or though a WDCC conference, it wasn't immediately interpreted that it would be a boon to revenue growth. But, they slept it on overnight. D.A. Davison gave them an upgrade and said, hey, this is going to reinvigorate growth. There's just going to be a whole new upgrade cycle. So if you go from flat growth for a year or two to projected growth in 2025, then all of a sudden that high multiple that you were paying for on a historical basis for Apple is not so high.
Yeah, solid points. And then the market responded, and Apple went from underloved to overloved all in 1 week. And another stock that continues to get the love is NVIDIA. Really, over the last 2 weeks, it's been the piling in before the split and now post-split. How are you looking at it, NVIDIA?
Yeah, I think a lot of people were looking at that 10-for-1 stock split and licking their chops. Hey, we're going to short this. I think Dennis did for about 45 minutes until he got stopped out on it. As my partner on the pre-market prep show, I mean, the demand is there, right? And they have the product. I mean, they can't get enough of it. So companies are, supply and demand. You keep the most amazing thing is with this rapid price appreciation, and I haven't looked at the multiple recently or last couple of days, but it's still maybe trading at a cheaper valuation than it was when it was 80, 90, $100, because when you increase your revenues and, the sales that much, well, that's what they call it, price to earnings, right? And if you don't have that, earnings growth, then stocks don't go. But you see it again today, up making a new all-time high. And the other thing that you alluded to is, maybe managers that weren't in it. Oh, stock split. I'm going to wait for the pullback. And the pullbacks are still very, very shallow. So, the only thing I'm looking at it here over 130, 132. If you're in the stock, if you're in it long term, then forget about it. If you're in a short term swing trade or options trading, wait for a consolidation period, and then maybe a break out of the consolidation period. But a down day is NVIDIA is when it's unchanged.
That's a funny statement, but so true. And you brought up the point about growth. There really seems to be the growth versus value. Everything shifted to the growth. Some people have noted that everything's really piled into the mega cap tech stocks. Do you think that there is a catch-up trade? I mean, I know you voiced your opinion on this before, that the catch-up trade may keep lagging, but at one point, do you think people take profits in some of these big things and move it into other sectors?
I think if they did anything, I think they would maybe, I would say the exact opposite. Cut your losses in these value stocks, cut your losses in the IWM. And if you're not comfortable buying the growth tech at these levels and sit on 5-6% in cash and wait for a pullback here. I think what the two things the market tried to tell us this week. First thing they tried to tell us is that lower interest rates are not even going to bail out these small caps, right? You're talking about one rate cut, and we can get to Powell in a minute here, but the reaction to the IWM to benign inflation numbers is the exact opposite reaction that you wanted, or what conventional thinking would say. I think the other thing the market's trying to tell you is that AI, it's going to be good for some companies. It's going to be good for the chip makers. It's going to be good to the companies that supply for the infrastructure. But you know what? It's going to be bad for a lot of companies. It's going to be bad. Whether their products, not so much their products, but, maybe bad for employment. Like, replacing jobs. I guess that could be lower cost for companies. But what if you're an editor for the Washington Post? What if there's so many different ways that AI can go into, hurt the job market. And you're seeing the unemployment go a little bit higher. But basically the market is saying AI is bad for the small cap. AI is bad for a majority of the companies. Now, whether that will play out in a real life scenario, it's hard to determine.
Yeah, you make an interesting point there, because there's also been a lot of companies that on their earnings reports have invested a lot into AI, but haven't really seen the returns come in to shareholders yet or in profit yet by investing in AI. And I know it's a process and not an event. It's going to take time. But you make a great point about the labor side of things. Maybe companies save money because they can lay people off, but is that good for the economy if AI is running everything but humans aren't? What does that mean for the economic picture?
I mean, exactly. And I think that's what you starting to see here. I mean, there's obviously always, separation in the retail sector. But, what good if you have all this AI and all this efficiency and, people don't have jobs and there's, 6.5%, 7%, unemployment. So got to really be careful what you wish for here with, the progression and the way things go in AI. I mean, some companies, I don't know what they're expecting out of their AI investments. I don't know how you measure the return. With something like with NVIDIA or Vertiv, I mean, people are using the chips. They're buying the chips from you to create the, new ways of analysis with Vertiv, their cooling systems. I mean, these companies, before they're spending money on the AI, they better figure out what the hell they want from it.
Yeah, it's a great point. And I think some companies are just so caught up in the narrative that they really haven't defined what their goals are to get out of the AI and how does that return value to their company, to their staff, and to shareholders. Another good point you made about the small caps and the IWM was the bizarro response to the interest rates. And a lot of that probably ties into the Fed meeting that went through this week and Powell's press conference. What did you take away from the Fed and Powell?
I think the primary thing is he kind of took 2 rate cuts off the table for the year and, got it down to 1. Personally, I don't know if we need any. I don't even know if one's a given. But, I hope I've stressed this before being, interviewed by you guys, is that if your investment thesis is based on, rates going substantially lower, I think you need a new thesis because they may go. I mean, think about it. If rates are going lower, that means the economy's slowing down and we're moving into a recession. How's that bullish? I think, and I've said this before, and I'll say it again, stable for longer. Let investors say, have their fixed income. Some like myself probably have too much of invested in that. But it's just the rate scenario. I mean, that was the playbook. You got to have a new playbook. You can't keep using the same playbook against the same defense all the time. And I think you had your period of interest rates incredibly low. They should have started moving up in 2019, 2020. COVID hit. They had to reverse course. And now there's a lot of excessive unwind. So Powell's not going to come out and say it, but I mean, rates are never going back down to where they were. Even if inflation gets back down to their target of 2%, it still doesn't make any sense to take rates as low as they were.
Yeah, it's a great point. And even if they only cut 25 basis points or 50 basis points, that's still going to be stable for longer. And that is exactly what the Bank of Canada and the ECB in Europe did, is they just did a minimal cut. That's not what some of the people hoping for a return to zero interest rates are expecting. And I think there's going to be some cold water thrown on a lot of investors' expectations. But talk about a company that's not stable for longer, Joel. Your favorite guy, Elon Musk and Tesla. What do you make of that mess this week?
Oh, boy, oh, boy, oh, boy. I mean, first of all, technically, it's been in a long consolidation period. And I like consolidation periods. The reason you do is it measures that, the mood of the market. And earlier in the week, it penetrated the lower end of that consolidation. And I'm like, no. I'm not falling for this. I'm not getting short this. Nor did I buy it. And then you get the news of this ridiculous, well, I'm not going to call it ridiculous. He met his goals. The company asked him to meet certain objectives. He met those objectives. You pay the man, right? So you go from breaching the bottom of the trading range, let's just call it 170 to 185, 190. So within 3 days, you go from the bottom of the trading range to the top of the trading range. And I thought that price action was so telling yesterday, where it struggled at 190, fell, ended up still up on the day. And then now it's actually at a lower level than it was before. Second thing you got to think of is the company has $11 billion in cash. They owe him $50, $60 billion. I know you can give out options and stretch it out, but still there has to be some dilution to the company. The last thing, and if you listen to the pre-market prep show and you listen to Dennis, who's just internally bullish the stock goes against all his investments principles, stock in an uptrend, no. Stock at a reasonable valuation, no. Stock growing earnings, no. But there seems to be this infatuation with Elon Musk that we are just in 2 years, Shad, you're not going to have a car. You're going to be in a robo-taxi from Tesla, and they're going to be consuming your data. There's this overall obsession. And I'm an old fart, so I don't want to poo-poo technology and things advancing. But really, are we all going to be in these robo-taxis and being on the internet and him consuming our data? I mean, yeah. I mean, you ever hear of the Jetsons, right? The old show. I mean, things can change. But there are aspects of Elon Musk, and you can't poo-poo the accomplishments that he's made and what he's done with SpaceX and Starlink or whatever. But I don't know if that value is in Tesla or in all the other holdings that he has. So it's very convoluted to me. I definitely think the man should have gotten paid. He did get paid. But I think the price action that is being displayed right now, you have to be concerned if you're a Tesla shareholder.
All right, Joel, well said. And final Jeopardy here, final question, S&P 500, it's been up in nosebleed areas, but what are you looking at as far as technical levels?
It's so funny because I did my workout late today, and I'm a swimmer. I don't know if I ever mentioned that before. And a young lady, a swimmer, she's like, "Oh, the market's down today." And I'm like, "It's what?" I'm like, it's down today? S&Ps made an all-time closing high yesterday, okay? At 54.38. Right now, the futures are trading at 54 and a quarter, okay? 13 handles. That's not down. I mean, now there are certain stocks, as we said, the value stocks and stuff. But the only thing that I'm looking at today, and I pay close attention, closing prices, that all-time closing price from yesterday, 54.38. We made a daily high just above that. So that's my bogey. We just tried to rally up again, and we came up short that level. So if you're an investor, if you're thinking about asset allocation or trimming or whatever, and I'm not talking about all the stocks that have been just making new lows. I'm talking about your Apples, your Microsoft. Note the all-time high. More importantly, note the all-time closing high, and then use that as a mark because that's what the institutions are going to use to maneuver in and out of their positions. So for me, I'll give you one number. I'd like to see us make a new all-time closing high above 54.38. Doesn't look like it's going to happen today, but there's still 2 hours left.
Well, Joel, we'll wrap it up there. That's a great point about the all-time closing high and looking at that as a marker. And we're still pretty close to it. So even if the markets are slightly in the red today, it's after a really great week. And it's a really great way to end the week talking with you. If people want to follow along with Joel, definitely click on the link below this. It takes you over to the pre-market prep show. And it allows you to check in on the markets early in the day with Joel and his partner Dennis as they dissect all the moves in the stocks and the indexes. And Joel, we appreciate wrapping up the week with you here at the KE Report.
Okay, thank you. We'll talk to you next week.